When you look at all the debt and money printing that has been tacked on, I mean, it's geez, if silver hit 50 in 1980 or even 2011, and we thought the money printing back then was a lot. Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And tonight we have an episode that's actually a call I recorded on the Investing News Network with Charlotte Mcleod and Brien Lundin. Brien, who hosts New Orleans Investment Conference. So we had a great talk about silver, why people might want to be looking into silver now. Keep in mind, it's about a week and a half old. So some of the, there may be a price or two that's a little slightly out of date, but I think the concepts are pretty valid. And since you love silver talk, I think you'll enjoy this one. So here you go.
I'm Charlotte Mcleod with the Investing News Network, and you're about to watch my recent conversation on silver with Brien Lundin, editor of Gold Newsletter, and Chris Marcus, founder of Arcadia Economics. Before we get started, I'd like to give a brief introduction to both Brien and Chris. Brien is the CEO of Jefferson Financial, a highly regarded publisher of market analysis and a producer of investment-oriented events. Since 1971, Brien has published and edited Gold Newsletter, a precious metals advisory service. He also hosts the New Orleans Investment Conference. Chris is the founder of Arcadia Economics and the author of the book The Big Silver Short. He has a background in trading, but he left Wall Street after the housing bubble burst to found Arcadia Economics. Chris is focused on helping investors navigate the financial markets amid inflation and historic bubbles in the stock, bond, and real estate markets. This interview focuses on what makes silver compelling today, how you can invest, and what you need to know about market manipulation. We hope you enjoy it.
So today we're going to be focusing on silver. And the first thing that I want to ask both of you is what makes silver compelling today? Investors often hear that silver is volatile, it's erratic. What fundamentals of the market make it compelling to you? Brien, let's start with you first.
Well, I tell people that if you think it's hard to understand the gold market, the silver market is exponentially more difficult because there are so many different factors involved in it. Silver does have an industrial component. However, I think it's unfairly characterized as having a major industrial component that impacts its price significantly or offers some downside protection. In fact, that reputation as having an industrial use actually hurts it, as we saw in this first volatility in the COVID-19 pandemic, when everything was getting hit. Anything that related to the U.S. or global economies was sold off, and silver was particularly sold off. In fact, even though industrial usages make up the majority of the usages for silver, if that were all silver had going for it, I maintain that the price would be under $5 an ounce, and that most of the price for silver is made up on the margins through investment demand. And the real characteristic about silver is that it moves later than gold, typically, but it moves further than gold percentage-wise and for the same reasons as gold. So it's kind of an easy, unexpiring option on the gold price. It offers you leverage to gold without a lot of the risk. It also moves more than gold on the downside, which is something that people need to know and recognize. But in a bull market environment like we're in now, silver is a wonderful way to maximize and leverage the gains in gold.
Okay, Chris, let's hear from you now. What makes silver compelling?
Well, I think a lot of the things that you and Brien both mentioned, silver is absolutely volatile. It's erratic. There are multi-year stretches where the price will often divorce itself from any seeming fundamentals. And I guess that's the thing. For some people, it's a terrible investment. If you want to make a return the next quarter or the next year, I wouldn't tell you to go into silver. But when you have something that's basically trading below the cost of production, I find it interesting. Silver is still a fraction of not only its 2011 high, but its 1980 high. And when you look at all the debt and money printing that has been tacked on, I mean, it's geez, if silver hit 50 in 1980 or even 2011, and we thought the money printing back then was a lot, As I detailed in the book, I don't think the market trades cleanly because you have banks that can sell unlimited amounts of paper. And to me, it's set up a situation where you have a lot more paper silver out there than actually exists. And that can go on for a long time. So when that finally breaks, but it is interesting for all the reasons that people are turning to gold. Perhaps a good way of phrasing it, silver is an amplified version of gold. So like Brien said, you know, and the times when it's going up, it's great. If gold's about to get hammered, then you probably don't want to be holding silver then either. But I mean, the headlines continue to emerge by the day. The Fed, a couple of months ago, they said they were going to print unlimited, and now that's not even enough. So for the same reasons that people are flocking to gold, I'm surprised. I'm shocked that we have $15 silver in this environment, but it's a very small market. And like Brien said, once it moves quickly. And that's what I expect will happen this time as well.
Okay, so Chris, you're talking about price. We know that silver is trading well below its all-time high. I know not everybody likes to make price predictions, but starting with you, can you give me an idea of the potential you see for silver in the long and the short term? I would say maybe for this year and in the next 5 years.
Well, sure. I guess I'll have to break the rules of that question a little bit because really what I would tell people about silver and the way I've approached it is that it's rather binary, where my guess is that the price will probably flutter around where it is until we run into some sort of issue with all this leverage out there, which appears to have begun to happen. I mean, it's like a mix of the Three Stooges and musical chairs between the COMEX and the LBMA over the last couple of months. It's bizarre to me that to meet delivery on the COMEX, they have to source metal from the Perth Mint in Australia. Doesn't sound like the most sturdy arrangement. And you've seen it try to get above 20. I'm far from a technical analyst, so you know you can make your interpretations there. But I think we're headed to a point where people realize this is a fractional reserve. We've heard for years whether that's a force majeure or some sort of cash settlement. But when you look at the amount of paper that's out there and the amount of metal that's out there, it doesn't add up. And it's tricky to know when that resolves, but sure is a lot indicating that there's some smoke coming out now. So the timing is whether that's this year or 3 years from now, I don't know. But when it goes, I mean, to me, I look at what happened in 2011. That's what the book gets into. Either the price came down because they sold a lot of paper that they can't back up, or maybe there's another explanation. But if that is correct, to me, $50 seems like a floor whenever a free market comes back.
Okay, Brien, we'll pass it over to you now, talking about the silver price. I'll give you the same parameters, which is price potential for silver this year and in the next 5 years. You can choose to go with that or tell me what you think.
Okay, well, I would say we should get into the low 20s this year. Mm-hmm. I think very likely the high 20s the following year. When you look at the long-term potential, if you're going to go back to, say, the 1980 high of $50 and look at that in terms of current dollars, then you're talking about a silver price that's well over $150 now. So I think longer term, that's the kind of potential we're looking at. But I'd hesitate to put a time frame on that. That may be 5 or 6 years down the road if we get to that point. But it's important to know that with silver at these levels, if it gets back to kind of the standard level it was in the post-2008 crisis, which was well over $30 an ounce, although it did spike to right below 50. If it gets to above $30 an ounce, it's essentially doubling from where it is now. And that means a lot of money is going to be made by people who invest in silver and some of the derivatives of silver and the stocks and other things.
Okay, so what I've been trying to do here is build just a really quick picture of silver in the past, present, and future. Assuming you have an investor who's convinced they're ready to jump into the silver space, what's their next step? I think experts usually recommend that investors start with the physical metal. So Chris, I wondered if you could explain why it's important to have silver physical silver in your portfolio?
Yeah, well, like you said, there's a spectrum of risks in all the different forms for people who are just starting out and just see the Fed doing what it's doing and say, I want protection. This doesn't make sense. They're just printing money to cover everything. Then, yes, having physical bullion you can hold certainly is a great starting point because, especially if you can have a long term perspective, you throw the silver in the corner, your vault, or wherever it is, it's going to be a block of silver tomorrow. I mean, you're waiting for the rest of the world to realize what the US is doing with their financial system. Whenever that happens, you'll have something that isn't a devalued dollar. There are a lot of paper silver options, which I would be very careful of. Myself, I would not store anything in GLD or SLV. Maybe it's back there 1-to-1 as they claim. There's a lot of people who have questions. To me, it's a risk. Those I think are good if you're trading for the next week or two. Now, on the other hand, I would feel comfortable with a Sprott trust. So there are good people out there. Just again, it's nice. Brien has a conference where you can come and meet all of them and see the different options. When you get, I'll let Brien cover the miners. He's far more of an expert there. Although, yeah, you can get leverage, but you have an additional set of risks. And Brien, would you like to take it from the miners, cover that risk spectrum?
Well, were you going there, Charlotte? Was that your next?
It is not the next question, but it can be. So let's,
Okay.
let's talk about the silver stocks. Is it an area investors should consider right now? And if so, where should they be looking? I know there are not actually that many pure play silver companies out there.
Yeah, there really aren't, and that's one of the things that Jim Blanchard, who was my mentor and eventual business partner in the industry, who was the original gold bug, original silver bug, and the like, and a real icon in the industry. He realized back in the early '90s that there weren't any pure play silver stocks out there, or not many, and it's certainly not on a junior level. So, in conjunction with Rick Rule, they basically restarted Silver Standard as a pure silver play, buying out of the money silver resources. And interestingly, Ross Beatty was a director of Silver Standard at the time and had already started a similar thing with Pan American Silver. And so he had to resign off of the Silver Standard board to pursue that. So it's kind of coincident that both of those started then. And you would think that it would really, we would have more pure silver plays out there, but there really aren't that many out there. We recommend a number in Gold Newsletter that have performed very well. And what I tell people is this, if you look at the big picture and you believe that gold is going up, and I do, and I think the reasons out there are obvious. So you have this macro picture, the secular bull market in gold. So that's going to drive silver. Silver offers natural leverage to the move in gold. Well, silver equities offer leverage to silver itself. And then you can go down the spectrum of silver equities from the big producers down to the more exploration plays and get additional leverage. So it's a way to pile leverage on top of leverage on top of leverage on a move that you're very comfortable is, a macro picture that you're very comfortable with. So that's what I recommend as well. And even in that, there's a lot of different ways to play it. If you find a producer that's marginal, that's barely making money or even losing a little bit of money at current silver prices, well, a 50-cent rise or dollar rise in the price of silver is going to raise their earnings by a much greater percentage than it would for a company that has a very low cost of production. So, and then their exploration plays. It's just a really exciting area in an already exciting and speculative broader sector of the mining market.
Great. Chris, I want to take you back to, you started to talk a little bit about silver futures, options trading. Those are things that might be interesting for people who don't want to have physical silver for whatever reason. They don't want to keep it in their house or they don't want to deal with that. You seem to be saying there is some risk in doing that. Can you go a little bit more into the risks? Why is this something people should be careful of?
Sure. I mean, if you have, when someone's, there are a lot of people who say, if I don't hold it, I don't own it. And I think there's truth to that. At the same time, let's say, you've worked your whole life, you saved up $10 million and you put it all in silver. I don't know if putting all of that in silver would be the best way to go. It probably could pay out well someday, but we'll leave that aside. Still, if you have $10 million of silver, are you going to put that all in your home? My guess is you've probably talked about it. You like talking about silver. So there's always diversification is good. There are actually, there are not bank vaults that I would probably put my silver in. There are other vaults that, if you find trusted counterparties, again, a lot of them go to Brian's conference, and there's different people out there that share these things. So there's solutions out there. I wouldn't want to put it all in my basement. And like Brian said, when you get into the miners, you can have a miner that doesn't find silver. So it doesn't matter what the silver price is. There's actually one level of risk if you wanted to stack on top of, as Brian was saying, with the leverage. Partly my introduction to this, I was trading options on some of these miners and things back in 2011 on the way up. It was a lot more fun than on the way down. So there's a whole, there's downsides to today's Wall Street, but one of the positives is that they are offering almost any specific bet you want to make. And really, I think what comes down to is make sure that what you're putting your money into matches what you think, not what anybody else thinks, but also that the risk you're taking is appropriate. I do still do some option trading on miners, but I'm not more, spending next month's rent money or mortgaging the house to do it, because there's different degrees of risk. But what's nice is you can have bullion shares, or there are some silver miners that have a strong balance sheet. Some of them, if silver's $15 a couple of years from now, they'll be all right. Some of them might not be in business. So, and it's up to each person. If you think silver is really going to move this year, then you can bet it more aggressively. One thing I've learned is that even as much as I see this as inevitable, it's dragged on longer than a lot of people think. So really just making sure that at the end of the day, when you see what your money is, shouldn't be matching what anybody else thinks. You can take advice, you can get opinions, but make sure that it suits you, and that's how you can get a good outcome. It's like whatever the situation is, you work with that, and then you can get good things to happen.
Okay, great. Now, as we're talking about this, we've had some interesting dynamics lately relating to pricing for physical silver, and I want to take a moment to go into that. Basically, we saw the price of physical silver diverge from the silver spot price, meaning people who wanted to buy physical silver were paying well over the spot price. Brian, it's a pretty complicated situation. I wondered if you could give me a brief explanation of what happened there. And I know it was something that was also going on in gold as well.
Yeah, thank you, Charlotte. I take a bit of a different view than a lot of the other pundits out there, analysts out there. I look at it as two separate problems, and I think it was clearly two separate problems. It was late March, I think it was the third week of March or so, on a Friday, when Pamplona Mint in Switzerland, or actually refinery, announced that it was closing because of the COVID crisis, and a number of the other refineries in Switzerland announced that they were going to close, or at least temporarily, obviously temporarily. But the next Monday, the Fed came out, and it was actually on a Sunday evening, they announced unlimited quantitative easing. That was their first salvo. They didn't work up to it like they did the last time around. They came out with the bazooka right off the bat, and they said they were going to buy as much as needed for as long as needed. And actually, it was QE infinity. So that set about a scurrying for physical product in North America primarily. But it was two different issues. The issue with supplies overseas out of Switzerland created a problem with the spot market in London, and traders who were arbitraging the spot market in London and the futures market in the US. So instead of buying spot, they started buying the futures, and the futures then developed a significant premium, briefly approaching $100 an ounce above the spot price, when it's typically, $10 an ounce or thereabouts. And but it was averaging out around $50, $60 an ounce, still very significant. There were concerns about supply issues, transporting physical metals from Europe, from Switzerland through London to COMEX. COMEX created a new contract where they could settle in, or at least putatively settle in 400-ounce good delivery bars, where they typically or had 100-ounce bar settlements. So it was a big mess in that respect. A lot of people blamed the shortage of physical metals, bullion, in the US and Canada on that issue, but it was an entirely different issue. Because what happened was when the Fed announced QE infinity, you had a rush of US investors primarily to buy bullion, gold bullion and silver bullion. And the entire North American supply of bullion coins was absorbed within the matter of 2 or 3 business days, and premiums shot up. There was no way that the shutting down of refineries in Switzerland just a day before, business day before, or coincident with that surge could have had an effect on the actual supply of physical bullion in North America and through the major mints. So that surge in demand, as I said, absorbed all of the available supply, and premiums rose to try and pull metal out of the market from people who already held it. The result for silver was that the on the street silver price was $7, $8, $9 more than the silver spot price, and this is accounting for the premium, which is usually $1 or $2 above an ounce above the spot price. Even above that, coins were trading for between $7 and $9. 1 ounce silver bullion coins, the most popular American silver eagles and the like, were trading for that. So if you wanted to buy bullion, you were trading for buying it for that kind of a price. And you know, I don't say that the actual global price of silver should have been $7 or $8, $9 higher to recognize that supply shortage in North America, but it should have been a few dollars higher than what it was reported in the paper silver markets. So we have a real disconnect right now between the paper silver and gold markets and the on the street price. And that just, you know, I think is evidence of my longstanding contention that this paper gold and paper silver markets have really no connection to the real world supply and demand for the metals.
Okay, thanks for that explanation. That was great. I wondered if Chris could now weigh in on where we're at right now, if we're still seeing that disconnect, that divergence, and what might it take to resolve that, if it's possible?
Sure, and I think Brien really summed it up pretty well there, where we've had a disconnect, a divergence. It's interesting, in these last 2 months with Corona, I saw an article from Jeff Clark of goldsilver.com, who's a very good analyst on top of these things. He said if you factor in the Chinese numbers, which are a little bit opaque, that 30 to 50% of the silver supply is currently shut down. Again, to put a little perspective on some of those bullion numbers, I host a show where I've talked with bullion dealers around the globe. I also have a business relationship with Miles Franklin where I help people buy and sell their metals. So what's interesting to me is that I don't think this was like a 30 or 40% increase. This to me seemed more like a 5 or 10x increase uniformly on the retail side. So again, it's kind of unusual that you have demand surging, supply falling, and the price drops $7 on the New York exchanges. You know, again, it happens because it's traded in paper. And I know people may or may not like that. I try and deal with what is and then how you can respond to that. So it's interesting, even bullion dealers are paying over spot for metal. So is there some point at which the COMEX price becomes equivalent to the CRIS price? I don't know, maybe I think it's $50, but if you can buy it for 25, so I mean, I guess we'll see if these spreads stay, if we come back from Corona, life resumes, and these premiums stay elevated. There's an ARB on the board right now, because I'm looking at APMEX, and they have a Silver Eagle at $27, whereas the price of silver today is up a quarter, so it's almost $16. So if you can sell it at 27, simultaneously buy at 16, now not everybody can go out and do that, but certainly there are financial institutions. There's an ARB on the board right now. And at some point, you know, I guess either there is physical delivery out of the COMEX, which maybe we'll find out. But otherwise, what does it matter if what they say, if that's not where people are actually buying and selling it? Again, are we at the break point? I have not seen enough to confirm that, but gee, these are sure a lot of the signs that you would imagine would happen before there's some sort of issue. Again, if there's a way that the paper metal and the physical matches up, I've not been able to figure it out in the last 11 years. So there's an imbalance coming. It could happen this year, or maybe it takes a little longer, but certainly it's on. When you see liquidity announcements out of these exchanges and they're shipping gold bars back and forth, there were also, and now I guess it was confirmed yesterday, I'd been hearing 2 market makers got blown out in the LBMA on March 24th. And now there's a story that's been passed around the news in the last day about HSBC lost $200 billion. Was it billion, Brian? I think so, right?
Actually, no, it was much less than that. It was
billion or million on that. I guess billion.
It was actually 2 million, I think, which was kind of strange, but they lost it on that day.
I see. They're saying here 200 million. Okay, so yeah, 200 billion would be a little bit bigger than, but yeah, and then these are the kind of things that happen when things aren't well. I mean, it's clear that things aren't ideal. Whether we're at the break point, we'll see. It's possible, and we'll see. But I mean, certainly people are wanting to buy gold and silver as protection against the dollar. I mean, gee, it seems like now is the time to do it. I mean, are you going to wait till silver goes down to 15 or 14 versus, to me, the skew, it's like if my view is correct that, and like Brian said, 50 or 150, if all these factors and the way we're looking at is correct, to me, I don't know, maybe it'll go down another $1 or $2, but do I want to try and get $1 or $2 and miss out on 30 or 40 is how I look at it. Again, requires some patience, but if you are able to have patience, I mean, some of these assets where when things trade below the cost of production, you don't have to take my opinion which way you think it's going to go.
Okay, thanks very much. So hopefully we've given people a bit of an idea of what their options are when they're looking at silver. Before we finish up, I think it's important to discuss manipulation in the silver space. It's a topic that investors are definitely going to hear about if they start getting into silver. And people seem to have a wide range of opinions. Some think it's something that market participants just have to live with. Others think it's something that needs to be addressed and ended. Chris, I believe your book, The Big Silver Short, tackles that question and explains how investors can benefit from those dynamics. So I want to start with you. I know it's a huge question, but what would you say is the most important thing investors should know about silver market manipulation?
The most important thing, perhaps, is that everything's out there. You don't have to take my word for it. I'm not the one that was working at the Department of Justice and charged JP Morgan with the RICO Act. This stuff is there. In fact, the way the book came out, I mean, you've heard my view of what I think is happening in the market. For years, I kept thinking, no, there's no way this is how it could actually be working. So really what led me down this path, I mean, the way my mind was trained from the trading floor, I'll look at something and I'll have an idea and then I'll see, all right, what could I be missing? What the guy who's betting against me, why does he think I'm wrong? Where's the, and you know, the book consists of interviews with 15 of the world's experts, just of silver experts in particular, just digging through these things. And you hear them all say the same thing, come to the same conclusions, because it's not, and I understand why people think it's conspiracy theory. It's hard to imagine that the markets have become this distorted, but you can just look at the Fed openly manipulates the bond market, calls it policy, and hopes everyone plays along and pretends that's normal. So certainly the book is one data point. Although if somebody wanted to do something easy they could do as soon as we're done here, I did interview Bart Chilton, the former CFTC commissioner who was part of the agency's investigation into silver. I was actually stunned what he shared on, and that was part of the book. He flat out confirmed JP Morgan had the position. It was over the limits after they took it over from Bear Stearns. He gave them a temporary waiver to make it smaller. They made it bigger. Coincidentally, this is when silver fell from 21 to 9 days after Bear Stearns had collapsed. JP Morgan took over the position. You have the price plummeting while there was a physical shortage of metal. So we've seen this before. Last time it ended up with $50 silver. I think it'll ultimately go a lot higher this time. And again, I understand the confusion. That's why I did the book, because I know some people, if you say manipulation, they think you're nuts. Or again, I just trained to look at data and research it and get opinions and, let people decide for themselves.
Okay. And Brien, any thoughts you would add on silver manipulation? Would you view it as a concern, a potential opportunity for profit? What are your thoughts on that?
Well, I think it's a potential opportunity for profit because the price has been held in check, like gold, through these paper market manipulations. And I don't know that there's anything special about the metal. Well, I do know there is something special about the metals. It's what we're all involved in for those special reasons. But just about every market of that size is manipulated to some extent by short-term traders, by high-frequency traders. The monetary metals, gold and silver, have a special legacy or history of this kind of manipulation. Gold was manipulated overtly and covertly by the U.S. government a couple of times in the past. As Chris mentioned, the Federal Reserve openly manipulates the price of money, which is, of course, the price of everything in every market. We know that they created the various puts named by the Federal Reserve Chairman underneath the stock market and elevated financial assets, the equities, bonds, and the housing market post-2008 to create a wealth effect. So it's all around us. And I don't know how anybody can really look at this and say, well, what's so special about silver and gold that that's the one market that they're not manipulating? I think the burden of proof is on people who argue that there is no manipulation. But that said, there is something going on in the physical availability of silver and gold out there. I think that's prompting a lot of big pocket investors to avoid, to some degree, at least at the margins, the paper gold and silver markets and go into the physical ETFs. And of course, there's some issues with that. And I agree with Chris. I think the Sprott bullion trusts are the way to go in that respect, and not GLD or SLV. But that said, I think that a lot of money is going into the ETFs. You see that in the charts. It's breaking all records. They are at all-time highs. At the same time, that open interest is falling in the paper, silver, and gold markets. So I believe there's a shift in allocations there. And for the COMEX to be able to be resorted to these games to supply, to back up its trading with physical metal, shows that there is something going on there. And I think the smarter investors out there, the really deep-pocketed, smart investors and institutions are sniffing something out in moving into the metals, not just because of this macro picture that we've discussed, but there is something going on on the supply side of the equation to backing up all of these investments. And that, I think, offers the potential for profits in excess of what we would normally get from these macro trends.
Okay, that was great. Thank you both so much. I think we're going to leave it here for now. Hopefully people, by watching this, have gotten a good introduction to silver, how they can get involved, and some of the issues in the market, although I know there's definitely more research people could do. Thank you both so much. Once again, I'm Charlotte Mcleod with the Investing News Network, and this is Brien Lundin, Gold Newsletter, and Chris Marcus of Arcadia Economics.
So there you go. That is tonight's episode. Thank you, as always, for watching. And if you did enjoy that, go ahead, hit the subscription button and the notification bell so you can be posted as more news is released and we dig into this, especially because just a little preview for the weekend, this news this morning Bullion banks prepare CME pullback after virus snarl. Interesting news. Some now intend to reduce their open positions between 50 and 75%, which obviously ties into what you just heard. And this weekend, we'll be digging into that with Dave Kranzler and others. So a lot coming. Thanks again for watching. And if you found this helpful, stay tuned because more coverage of gold and silver coming your way now.